What is the best way to scalp gold? Now, a lot of people think that trading gold is this difficult thing, and because gold has shown a lot of people a lot of flames. Now, in today's video, I'm going to show you guys a simple way in how you can scalp gold. I've also seen a lot of positive feedback on the previous video that I did, which was also educational based. If you haven't watched that video on how to swing trade foreign forex currency pairs, go check that video out. You'll know exactly how I swing in the market. Today we're going to focus 100% on how you can go into scalping gold, and we're also going to select another two winners to give away $15,000 in a gold funded trader account, which brings us to our lovely sponsor for today's video. That is Gold Funded Trader, that offers a full MT5 platform to trade on. They also offer instant plans, which means instant funding. They've got an in-depth journaling trading on your dashboard. That means while you are trading, you can basically journal your trades to ensure that you know exactly what it is that you might have done wrong in a certain trade. They also have a guarantee system where if they don't pay you out in 2 business days, they'll pay you an extra $500. They got free trading competitions, multiple payout methods, and 100% split. They also have a reward system where you gain points and spend it on their platform. Stock trading is allowed on MT5. News trading is also allowed, and they've paid out well over 13 million US dollars. Click the link in the comment section or the pinned comment below to grab 40% of your first gold funded trader. Now let's jump straight into it. Now we all know that gold is not a very easy thing to trade. Gold is just one of those things that people find very difficult to trade, and one of the reasons why gold is so difficult to trade, it's due to its volatility and because it's directly correlated with the dollar index. Now, correlation basically means that the one runs concurrent with the other one. Is like your left. It's almost like yin yang, good and evil. So when the one goes up, the other one goes down. But we found that in most cases that hasn't been the case with gold. Sometimes gold is a safe haven. Not sometimes, it's always a safe haven. But sometimes gold doesn't always correlate with the dollar index. But this web method in what we're going to be discussing today will give you a couple of points that you can be focusing on in order to trade it more efficiently. Now, what you can see over here is gold on the 4-hour time frame. Now, there's a couple of rules that you need to follow, and as you guys know, I like to list those rules before I do anything. And like I said before, I might put something together in next year for people who wants to learn, but before I do that, I'm putting out everything for free so that people can learn from this. And I've also put out everything on YouTube for free already, but I know there's people that would love for me to actually have that on a call or on a whatever. So I'm putting together something maybe next year. I've said that last year, I've said it this year, but I might put something together next year where I'll be sharing basically everything at a fraction of a cost. And if you don't want to pay me for it, that's fine, because it's also available free on YouTube for you guys to do that. But in any case, let's go into the scalping strategy, right? The gold scalping strategy. Gold scalping strategy. Now, the reason why it's important to always list the strategy or the way you trade it, it's because every trader needs a set of rules that they follow. And these rules allow us to make better trading decisions when it comes to deciding what it is that we need to do. Rule number 1, right? We identify, identify price action levels on the 4-hour time frame. Now remember, this is not like the swing trading strategy where you rely on things like news events or retail sentiment or order flow information. This is not like that. So you don't have to worry about this. And then what we basically do is, once we've identified price action levels on the 4-hour time frame. Now we are on the 4-hour time frame, and when I talk about price action levels, we are talking about these levels that is identified in the market. And I'm just gonna highlight, a couple of these levels, for you guys. You can always pull them all the way back, but what I ideally like to do is, when the market prints a new low, we stick with that. Previous low here, we had nothing created over here, so we're not going to go with that one. And then we can go to the top level over here as well, and we can say we've got those levels there. And then we also got these levels that the market had just tested. Now remember, you can, like they will always tell you, is that you can trade, but I don't know if people still trade this, but there's this thing that they call channel trading. I don't know if people still trade this, where you basically trade the market in a channel. I don't know if people still do that. We used to do that back in the days. But I'm now talking about key levels, right? These are key levels. And what you can do is, once you understand how this works, you can always apply it a little bit. You can always go and apply it inside of these levels. If you feel like you want to do it, you can always apply it in these levels, like this key level over there, which would have been a nice trade over there, right? So that's the first thing that we do. Now, what I would suggest for you guys to do is that you always want to go back into the price. Always go back and see, exactly what it is that I'm referring to, and you can kind of identify these levels in the market, these very key areas in the market, to see how the price behaved around these levels, to understand or to test whether or not I'm saying is working for you or not. Now let's move on, right? Number 2, once you've identified the price action levels on the 4-hour time frame, number 2, you want to drop down onto the 1 hour. Okay, you can drop down onto the 15-minute also, and wait for the market to create and break the structure, right? So we're gonna say create and break the structure. I can't even spell today. Okay, so number 2, wait for the market to create and break the structure. So what does that look like, right? So if you have the market printing these 2 levels, right, and so when you have this market printing these 2 levels, right, so this is called resistance, this is called support. Now when we talk about waiting for the market to create structure, if the market's trading above this level and it's moving like this, what you want to do is you want to wait for the market to do what? Print a new structure or print a new resistance. You want to wait for the market to create structure, then break the structure. Now this applies the same for the one here at the bottom. What you want to do is, if the market has been trading at this level over here, what you want to do is wait for the market to create structure, then break the structure. Now, for those of you that don't know, because you've paid the FX codes for 1.2 and 1.3 and 1.4, 1.5, when we talk about structure, a structure is normally created when the market prints a red candle next to a green candle. So in a situation like this, okay, where you'll see something like this, right, we'll go green. So when you see the market printed a green candle next to a red candle, this is considered structure, that is considered resistance, this is considered support. To give you a couple of examples over here, here's structure created, support was created over there, and the way support was created is when the market printed a green candle next to a red candle, green candle next to a red candle. This is structure, this is all structure created. You see, structure is created through the market creating a green candle next to a red candle. Okay, now that was step number 2. I don't even know where I am, right? Now you drop onto the 1 hour time frame and you wait for the market to create and break the structure. So what you want to do is, right, so, and I don't want to clear all of this, but let me just get the object tree and clear this and clear that. Should also be cleared. There we go. Okay, so now the chart's back to clearance. So what you want to wait for in a situation like this, right? You want to drop down on the 1 hour time frame. So now we're going to go on the 1 hour time frame. So we have identified these levels in the market, right? We have identified structure in the market. Now remember, in this case, we do not rely on any other data. Like I said, when I put something together for you guys next year, I'm going to talk about order flow information, so big banks, institution positions in the market. We're also going to take a look at fundamental data, and we're going to talk about retail sentiment, so retail trader positions in the market, if whatever I'm thinking about comes to light, right? So what you want to do is that you are going to wait for the market, right? So we have come to this level. The market then created structure. You want to, whenever the market creates a structure, you want to place a order at this level, right? You can put it right above this. You can always check for a slippage. So the slippage here we've got $3,910. We would call that slippage of 15, somewhere around there. Again, I don't want to confuse anybody, so I'm just going to tell you, just place a buy limit, once the market creates and breaks structure. Now, if the market never comes back and it creates a new structure, in this case, what you want to do is, when the market creates a new structure, you then place a new order. Once the market created the structure, it has broken above the structure, right? You then place a new order above that level, and you wait for the market, and you basically just leave it. Your stop loss, you always want to place your stop loss below this structure, because you want your stop loss to be protected by the structure in this situation over here. Now, I can take you guys through the way you do it with the Fibonacci, but that's a video for another day. Now, where do you put your take profit? Your take profit will always, you have to look left, and you always put your take profit aligned with the previous structure in the market. Now, I know a lot of people might say, yeah, but this just sounds easy. I personally do not trade gold. I have traded gold many times over the 12-13 years that I've been trading, and that is why I can tell you guys. Now, wherever your take profit is, that's entirely your choice, right? Now let's assume you've traded this market, okay, until there. Now, if you want to look for the next position, you go into the 4 hour time frame, and like I said, every time the market creates a structure, that's when you follow the structure moving forward. Now let's assume that the market printed new resistance over there, and you wanted to get in there. You want to drop down on the 1 hour time frame, and you want to go and look at this level here. Right, I'm gonna give you guys a couple of examples so that you can go through it and see it for yourself. Now we can see, once the market hit that level, the market then printed structure, right? The minute the market broke out of the structure, as you can identify there, you would have placed a sell limit over there. Now that order would have immediately triggered if you were in. Now I'm not gonna pretend that I'm LXG, who uses a reply tool, and pretend that I actually got in the market. I'm actually gonna tell you that if you did not get into that trade, then that is also okay. But we are going to be looking for an alternative if by all means, by all means necessary. Any case, so let's assume that you have placed your order there, right? And let's say for some reason, you forgot. So then you would have realized the market printed a new structure. Remember when I say that if the market prints a structure and it doesn't trigger your order, wait for new structure to be created. There you would have gotten the structure created. Structure got broken. You would have gotten in with this green candle over there. Your stop loss would have been somewhere up here, because it would have been protected by the structure in the market. Yeah, cool? Yes, I'm sure by now you guys understand what it is that I'm saying. Now, the reason why I'm using the key levels is because I'm not going to do all the work for you. You are also going to do your own work, and you're going to identify these key levels on the 4 hour time frame as well. Now, I'm not going to tell you to come in, the checklist, or tell you no, or tell you to, I sit with my students every week. So if you want to learn about, I'll sit and forget because I chill with my students every year. I'm not gonna tell you guys that stuff. In any case, let's continue. Now, let's assume that you are here, right? So the market printed structure and you are there. Now, you can obviously trade this market all year if you wanted to. You can trade these levels, all of these levels that were created before we got there. You'd have dropped down on the 1 hour time frame, right? Now, here you can see, if you look at this level over here, where the market had hit this level, right there, you can see here the market created structure, right? That was the structure. Market broke below that structure, pulled back. You would have triggered into that trade there, and then you would have probably still been in the trade depending on. But if you wanted to get in here, you would have seen that there was no structure printed until you got into there, and then potentially you can place that order from there. Now, as I always say that, guys, this should not be considered a substitute for financial advice. I don't want you to look at this and think this is financial advice, or this is an easy way to trade, or easy way to get into the market, because that is not the case, right? That is not the case. What I want you to learn from this is that the market is very simplified. It's very, not gonna say easy, but it's not that difficult to trade, right? The most important thing that you want to keep is you always want to follow the price. Always follow the price in the market and make sure that you stay consistent and that you follow the price, basically, right? So let's head over to YouTube and just select 2 winners very quickly. So I did say we're going to use this video, which was the last video, and I want to say thank you to all the people for the feedback on that video. So the idea is I want to provide more educational content like this, but it doesn't mean that we're going to stop exposing scammers. But you must remember that you don't learn much from me just exposing people, because we've exposed a lot of people. And you can see here, it is scamming, exposing, education, because I do not just want to bring education all the time. So let's go and select a winner. I don't even know what the question was for yesterday, but I'm gonna give you guys the new question for today's video. Pick a comment. I used 3 different moving averages. Okay, Nathan Steerman has answered the question 100% directly there. 2 different volume indicators, 1 indicator for my baseline and 1 arrow indicator, 2 season indicators that act different. Thank you. I'm not going to read all of that, but thank you very much for answering the question. You found yourself a $15,000 funded account by Goat Funded Trader. And don't forget, guys, you can get 40% off your purchase just by using the link in the comment section below. Nathan Steerman, you've won yourself. And the next one, I started DCA, and this is a bot comment because you can see where there's Croc 77. You know, Croc 77, great video as usual. You know what? Thank you. But like I said, you guys need to answer the questions. Oh, I've won. Oh my God, I've won. Thank you. Word to be everything. I love this fight. This okay. I use a Fibonacci in the retracement. Okay, so you and the first guy, you've both won yourself $15,000 in the prop funded account. Guys, it's important that you answer the questions, right? Today's question is very simple. Do you trade gold within when you trade? And the reason why I'm asking these questions, because it shows that people are actually watching the video. You understand? Because we've found a lot of discrepancies with people creating 10,000 accounts just to win an account. So the question is very simple. Do you trade gold currently? And that's it. You just have to say, yes, I do trade gold. No, I don't trade gold because of X, Y, and Z. Guys, thank you for your time. And as always, cheers for years.